Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you could head directly to www.incomeinvestors.com. You can find the link to the website in the description below. Turmoil in the Red Sea continues to impact global marine traffic, with marine shipping companies like Maersk and others all suspending sailing through the region. And that's for a good reason, too. In early March, Belize-flagged UK-owned cargo ship was attacked by Yemeni Houthis and sank, spilling oil and fertilizer in the Red Sea. Since November 19th, 2023, there has been an escalation by Houthis that has resulted in container ships electing to reroute around the southern tip of Africa. This has increased the shipping time by more than 10 days, which has resulted in global delay in a lot of our goods. The biggest benefactor of this uncertainty has been marine shipping companies, as their time charter equivalent rates have soared over the last number of months. This is especially true for oil and gas midstream stock like DHT Holdings Inc., traded on New York Stock Exchange under symbol DHT. John?
Yeah, thanks, Mo. DHT Holdings Inc. is an independent crude oil tanker company with an international fleet made up of 24 crude oil tanker vessels in the VLCC segment. Each of these ocean behemoths can transport around 2 million barrels of oil. It's about to get a lot bigger too, like the company's fleet. On February 28th, the company announced it's building 4 large VLCCs for delivery between April and December of 2026. The average price for the 4 ships is $128.5 million, so they're not cheap. So has the option for an additional 4 VLCCs that can be delivered in the first half of 2027. Now, while some might think 2026 and 2027 are a few years away yet, but they won't add to the company's bottom line for a while. On the other hand, this suggests the company expects the VLCC market to remain exceptionally robust for years to come. Also, management said DHT will not be issuing new credit for the acquisitions. Instead, it will finance the projects with cash flows from operations, available liquidity, and new mortgage debt. Now, for passive income investors who are afraid of a big outlay, these investments are expected to be accretive to the company's earnings, with DHT maintaining its dividend policy of paying out 100% of ordinary net income to shareholders through quarterly cash dividends.
John, I was reading strong demand for oil and shortage of VLCCs helped DHT report the second best earning in its history.
Yeah, for the fourth quarter ended December 31st, DHT announced that shipping revenue increased a little more than 9% year over year to more than $142 million, while adjusted net revenues increased 6%. During the quarter, the company achieved average time charter earnings of $42,800 per day. Adjusted EBITDA grew more than 8% sequentially to almost $73 million. And fourth quarter net income advanced 13.8% quarter over quarter to $35.3 million, with full year net income coming in at $161.4 million. That's the second best year in the company's history.
This is something income investors will like. This company recently delivered its 56th consecutive quarterly dividend.
Yeah, while TCE rates or time charter equivalent rates can fluctuate based on supply and demand, what doesn't ebb and flow is the company's commitment to its quarterly dividend. In the fourth quarter of 2023, they declared a dividend of 22 cents per share. That's up 15% from 19 cents per share in the third quarter of 2023. This works out to an annual distribution of 99 cents per share for a current yield of 8.99%. And to echo you, this marks the 56th consecutive quarterly cash dividend and continues to be aligned with the company's capital allocation policy to pay out 100% of net income. The payout doesn't always go up, of course. In the fourth quarter of 2022, it paid out 38 cents per share.
DHT stock is up more than 15% in 2024 so far, but it still has a potential upside of 50%.
Yeah, as of this recording, yeah. We've actually been following DHT stock holding for a while now. When we looked at it in 2021, it was trading at $5.38 per share. Now that price is adjusted for dividends. And on February 16th of 2024, it hit an intraday high of $11.90 per share. It's the highest trading range since 2011. And that represents a 3-year gain of 113%. Yeah, DHT Holding stock is down a little from its February 52-week high, but it's still, as of this recording, up around 30% over the last 6 months and 15% year to date. Solid gains, but Wall Street analysts think DHT stock has more room to run with a 12-month price forecast of between $12.67 per share and $17 per share.
John, thank you so much for your analysis. There's a lot to like about DHT Holdings Inc. It's leading independent crude oil tanker company that is reporting strong financial results and it's expanding its fleet. It recently increased its quarterly distribution and has not missed a payout for 56 consecutive quarters and counting. Thanks to strong industry tailwinds, the outlook for DHT Holdings remains robust. That's it for today, and make sure to go to incomeinvestors.com now to get our free special reports on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.